What's up, everybody? Austin here. Today we are talking about Snowflake versus Palantir. Which is the better stock for long-term investors based on the prices right now and in comparison over the next 5 or 10 years to buy and hold. First, I got to start by showing you my portfolio. Today we're down $1,800. Over the last month, we're down $2,800. Great, love this pattern. And since February 15th, 16th, 2022, we are down $7,650. We have put in $104,700 and we're at $97,000 overall. If you've been following along, I share my portfolio every week here on YouTube. Speaking of transparency, I own Snowflake. I don't own Palantir. I want to try to share why I own Snowflake instead of Palantir. First thing, I want to own great businesses. I want to own fantastic businesses. One of the best ways to measure that for a software business is something called net dollar retention. That is how much current customers spend from one year to the next. So for Palantir, it was 119% most recently. That means customers from a year ago, on average, spend 19% more this year than they did last year. Snowflake was at 171%. So that means current customers for them from one year to the next spent 71% more in the following year. What does that tell you immediately? That tells investors immediately that Snowflake very likely long term has to invest less in sales and marketing because their current customers are going to spend more on the platform. Or if they invest the same amount in sales and marketing, they're going to grow revenue more sustainably for the longer term because they can sit there and grow revenue at a higher rate from their current customers. That is also a sign that they are doing a good job innovating, releasing new products that their current customers want that they'll then go and sign up for and spend more money. So immediately off the bat, if there was only one metric I could buy and sell software companies based off of, it would be net revenue retention. And Snowflake is one of the best of all time. Let's jump into the fundamentals, right? And I want to talk about why I think Snowflake is a better long-term option, even though if you look at the price-sales ratio, it's at a much higher price-sales ratio than Palantir. The answer is you pay up for quality, right? So if we look at in January 31st, 2019, so this was annual revenues for basically fiscal year 2019, fiscal year 2020, and fiscal year 2021. We had revenue growth in fiscal year 2020 of 173% for Snowflake, then 123% for fiscal year 2021. In fiscal year 2022, we had 106%. The other thing I want to talk about is selling general administration expenses and R&D spend. This brings in stock-based compensation, which is a pretty large portion of operating expenses for software type businesses. And not to complicate it too much, but you'll see what I'm talking about right here. So we see selling general and admin expenses just overall in 2019 at 161 million. Then it grew a lot to 400 million, then to 655 million, and then to $1 billion in the most recent year. And the company is still growing R&D, which is good because that means they're investing to continue to innovate and release new products. Now, we know they're effective with that because of that net dollar retention rate, and we're seeing customers spending, that 170% number. They're spending more every year. They're releasing a lot of great new products that people want. That's great that they're investing in R&D if it's successful. Now, because of that, their operating expenses have still been very high. But because we've seen 100% revenue growth, I'm okay with that because I think they can tone down stock-based compensation and other selling general and administrative expenses like marketing spend and things like that. And they can also eventually get to where R&D basically stays, around the same amount of spend, which as revenue grows, it makes it a lower portion of revenue. I'm okay with those numbers, going up as long as revenue is growing better over time, which puts them on a path to be profitable. This is the difference between Snowflake and Palantir in this category. So they're spending all this money, but they're still getting triple-digit revenue growth on $1.2 billion in revenue as of last year. If we jump over to Palantir came in at $1.5 billion in revenue in 2021, but here's the problem. In 2019, they grew revenue at 24%. 2020, they grew at 47%. 2021, they grew at 41%. And the revenue is not that much higher to justify such a difference in growth based on the amount of money that they're putting into selling general administrative expenses. Again, that's at $1.2 billion for 2021. If we compare that to Snowflake, they're at $1 billion. So when we look at the revenue that they're earning compared to expenses, Snowflake is on a much better path to have consistent revenue growth, eventually become profitable, and then tone down that spending, whereas Palantir is investing heavily in selling general administrative expenses. Much of that is stock-based compensation. They are getting a little bit better in terms of operating expenses and operating margin, still in the negative, but they're better than Snowflake here. But the reason is that they are significantly toning down R&D spend. So we saw R&D spend in 2019, $305 million, then $560 million in 2020, down to $387 and $355. What does that tell me? That tells me that they are not spending as much to innovate and release new products. Maybe they're on a longer cycle because they released one of their new platforms here in like around 2019, 2020. So maybe that was a big investment. But either way, this is also indicated by that lower net dollar retention rate of 119% versus 170% for Snowflake. And we're seeing why that number is the way it is. They just aren't getting current customers to spend as much money, as much additional money as Snowflake is, because they don't release new products as fast, or they're just not as compelling for their customers. We can dig into what we think the theoretical use cases are of Palantir and Snowflake all we want. But if the business does not show the foundation in those numbers and the demand from customers in that number, it doesn't matter what we think, they're just not executing. And in my opinion, if we take emotion out of it, the numbers tell us exactly that story. Snowflake is innovating effectively, getting their customers to spend more and growing revenue so much faster. Palantir is much, much slower. And if that doesn't change, then that could be bad for Palantir in the future in general, right? Okay, so let's jump over to kind of my price expectations or my price scenarios for these two stocks. And it's not all bad for Palantir. I don't think Palantir is necessarily doomed. I've jumped over to Fast Graphs here. What we have down here is analyst expectations for revenue per share growth from fiscal year 2022 through fiscal year 2027. Analysts are expecting 15% this year, 24%, 26%, and then I basically just walked that down by about 5% growth per year. So we get down to 25% in fiscal year 25, 22% the next year, and 20% the next year. Then I have thrown in a price to sales ratio, which is one way that these stocks are valued, of 10, which is why you see that as the baseline right here. In my opinion, if the revenue growth per share is at 20%, I'm not 100% convinced it would deserve a price to sales multiple of 10. It's at about 9 right now. So let's bring that down to 8, and that would get us an annualized return of 19% per year for a 150% total return. The price would be $21 a share at the end of fiscal year 2027. And so that wouldn't be a bad return. Now, I'm not convinced that I would want to own Palantir because I think that they're in a tough situation with their government revenue slowing, their commercial revenue is growing, but I'm just not convinced that they're going to hit all these numbers and they're going to be able to control expenses. Again, another reason I don't own Palantir, but I understand people might have a different idea there and they might want to own shares. Now, if we jump over to Snowflake, I did the same thing. I put in the analyst expectations. Now, analysts are expecting revenue to continue to grow faster, which I do expect as well. And then I've done the same thing. I've walked it down just using analyst expectations. I've tried to take my own biases and emotions out and walked it down from the analyst expectations by about 5% growth per year. And that ends us at 34% revenue growth after fiscal year 2028 versus 20% in fiscal year 2027 for Palantir. That's the difference there in how that revenue growth plays out and how that net revenue retention rate can play out over time, right? It's a significant difference in revenue growth over time. We're looking at almost, revenue growth 50% faster if you look at 20% revenue growth versus 34% revenue growth. It's actually over 50% faster for Snowflake in 6 years from now or 5 years from now than Palantir, right? And so again, I think it would be likely to trade at either a price sales ratio of 10 or higher, given 34% revenue growth per share. And so you're looking at a annualized return of 13% for a total rate of return of 90% over the next 5 or 6 years for Snowflake at a price sales ratio of 10. But if it was up at something like a price sales ratio of 15, which I don't think is out of the realm of possibility if they're able to grow revenue that fast, then you're looking at a total return of 185% for an annualized return of 21%. I think it'll probably be somewhere in between there. I'm not calling $525 a share my price target for 2028, but I like the risk reward potential and the upside potential for Snowflake. And then if we think about the years beyond that, which I want to own stocks even longer than this, 10 years, 15 years, 20 years, as long as they continue to execute, Snowflake is in a position to continue to outperform Palantir over the long term if they're on this trajectory at that point. That's why I own Snowflake instead of Palantir, and that's why I'm still a buyer of Snowflake instead of Palantir. I understand the argument for owning Palantir. I'm just not convinced that it's a stock I want to own at this time when I have money in other investments, especially Snowflake. Let me know what you think in the comments.